Hello, it is the 20th of January 2011. Welcome to today's Silver Log, done a little earlier than I would have wanted to, but a lot's been going on today as the market is pretty much tanking right now and down quite a bit. As the 5-day moving average, or 50-day moving average, excuse me, a little bit of support here. Had a tiny bounce up to all of these moving averages and now heading lower. So the volume weighted average price since the August breakout on the 24th of August is right in here, which is pretty much around the 26.5 level. And it also lets us give us reason for it to go down towards that 25, 26 level. When I was watching CNBC this morning, they were stating it was rumors on higher interest rates that would bring these commodity prices down. Oil's down big today, as is gold and copper. So many different commodities are taking the hits to the downside. And to think that these fancy financial instruments can adjust the price of silver like this, well, it kind of makes you once again understand that this Ponzi scheme system and the way it's designed, and why we are all, or why a lot of us are getting into the physical silver. And if you're still on the mode of buying, well, then maybe you might welcome this, because myself, I personally do welcome this, as buying more at cheaper prices is always a good idea. And when we look at this on the daily chart, the Fibonacci levels that I've been talking about is a move down towards this 26 mark. And that's from the August breakout on the 24th of August, which is roughly around this level here, and this top at 31.28. And that's where that Fibonacci level that I've talked about from the 4.8, that's 31.40. So this is now successful resistance that has managed to make a successful hit. And if you think that the dollar's going to survive these times right now, and you want to get out of the silver market, well, I guess that is your choice. Myself, I know how money's created, and I realize what kind of results it does when you print money out of thin air. And when you print money out of thin air, state that higher interest rates are strong for a dollar, and bring down the price of the precious metal. I'm gonna actually love this, because I can buy it at a much cheaper price. Now, can we go down to majorly lower levels? I guess we could, because we got to remember the ones whom are in charge of making the price fixings go up and down are mainly the big bankers. When you hear on the television set or on the mainstream articles, markets are going higher or lower because investors see this, remember that word investors are the major financial institutions, where they really get to decide where the market goes towards. And if they do plummet this market to majorly low levels, what would be the reaction from that action? And within the physical market, you're going to either see the silver just run out, or dealers saying, screw you, we're not going to be selling it at these prices, and thus the prices would go up much, much higher. So thank you for watching this, and I'll try to get another update later on. Take care.